All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin in the crypto markets. Welcome in, everybody. Welcome in, Glasshopper77. Good afternoon to you as well. Time Attack, let's go, man. Welcome in. Thank you for being here and thank you for nodding. Much love to you, Yeshwanth. Great to see you in here. Hot Tamale, what's up, man? GG to you. Chad P, welcome in. Guys, Bitcoin has dumped. If you guys watched my video yesterday, Bitcoin has dumped through the value area low of our range. So let me turn on that range real quick. This is our range over the past 7 weeks that we've been in, 7-8 weeks that we've been in. And what we wanted to see, and we talked about this on Tuesday, how Bitcoin had come down to backtest that naked daily point of control in confluence with our value area high. And we saw a decent bounce from that. But we did reject from the lower high golden pocket 786 area. And then now we have fallen through our value area high and we closed the daily candle underneath the value area high. Yesterday in the video, we were coming up for the retrace. We were right in this area as I was making the video. And I said, guys, if we reject on this bearish backtest right here, we are expected to continue to dump, continue to make new local lows. And we did reject on that bearish backtest of the value area high, in some ways confirming re-entry back inside the volume profile, at least now making new lows and then expecting a higher time frame backtest of that value area high. And that is kind of what's happening right now. As we're going live on the screen, we are pumping from an anchored VWAP, support of the anchored VWAP, and we are coming up to backtest that value area high again. So depending on what happens here with the backtest, and we can even grab the liquidity that's right, that internal liquidity that's just right above that value area high at that VWAP close. Depending on what happens here, we might see a drop to 87.5K, and we might invalidate this being a impulsive structure, wave 1, wave 2, wave 3, wave 4, wave 5, seeing a bigger dump to the downside continue, and maybe even dumping all the way to take out all of this lower high liquidity, this liquidity trail that was left throughout that holiday week before our pump happened. So that's kind of what we're going to be watching for today throughout the stream. It looks like it's happening as we speak, as we're opening this stream up. Now, we have hit the golden pocket, guys. We are bouncing from a golden pocket, from an anchored VWAP. But the thing is, that is already in some ways invalidated the impulse, depending on how you count the impulse. You know, if we're going from these 84.4K lows, but we're looking at a wave 1 here, a wave 2 here, making a higher low, and then you have all your internal wave 1s and wave 2s. You could look at some sort of flat complex correction in here. Either way, if we're going to take that wave 4 target from the lows of wave 3, whether we want to say these lows or these lows, to the highs of wave 3, and we can just pull that second Fibonacci here, you can see that we have hit the golden pocket, and that golden pocket hit has invalidated in a wave 4. If you do come down and hit that golden pocket, that invalidates a fourth wave push to the downside. Very, very rare to see in a fourth wave, almost unheard of, never happens. So now that we've hit this golden pocket, we now have to classify this structure here is a 3-wave corrective structure, where it was a 3-wave corrective structure to come take out the liquidity of the range highs. And we might see a much bigger dump to the downside, possibly to come all the way down to the value area low, grabbing all of this liquidity in this trail that was left, and maybe even come sub 80K on this move down that we could be seeing. Now, there is a possibility that this range just extends, continues to extend in here, and we'll have to look at that as we're coming up to resistances, as we're coming down to support levels, to see how the indicators look. But it's not good that we hit this golden pocket. First of all, it's not good that we dumped and closed the daily candle back inside your volume profile. We have closed the daily candle back inside the volume profile, opened today's daily candle back inside the volume profile, and are still inside. So if we confirm a secondary daily close or a full daily candle back inside this volume profile, that would be in some ways finding reacceptance back inside this fair value between, 91.5 and 85.7. And we might see a move all the way down to the bottom of the range, or to grab some key liquidity that has been left behind within this range. We just took the liquidity of the range highs and a perfect swing failure pattern of those range highs. A lot of people were getting bullish, specifically after we broke out of the value area high. That last big daily candle, we saw a lot of people longing a breakout in here and trapped a lot of long positions in this area. So this could be some real big fuel to squeeze us to the downside. Now, if we go on to our liquidity heat maps, this is just the past 1 week of price action. You can see we do have some liquidity still resting below us that hasn't been taken yet. But if we zoom out to the 2-week heat map or even to the monthly heat map, the majority of that liquidity is resting down below 86K. And that liquidity would be taking out all of this liquidity trail that we talked about that was forming those higher lows that were forming over that holiday week where it was low volume kind of sideways price action. And it, now that even if we're hitting the golden pocket, we're seeing a decent bounce from the golden pocket to back test that value area high. But depending on what happens right now at this value area high, I'm actually looking to add to my short position. I did short the swing failure pattern. I'm 75% out of that trade already. I took a profit way up here, and then I took one when we tested this naked daily point of control. But now, depending on what happens here, if we reject here, I am expecting a move down to about $87,500, where we do have a plethora of confluence down there for support. But there's nothing really in between that area. We've already hit the naked daily point of control that I talked about in yesterday's video. It was about $90,100, and you can see really no reaction at that naked daily point of control. I left it on the chart to talk to you guys about it today, but now I'm going to go ahead and delete that. And man, it's just not looking good for Bitcoin here. We are now starting to develop some bull divs on the chart, and I do have to say this kind of channel that we've been seeing in here does look corrective, but I'm just wondering if we're going to break that channel to the upside just to make a lower high before coming back down here. And we are starting to break, at least if we pull a channel and look at, kind of this last little bit of price action in here. Let me zoom into the 15 minutes so we can get a better look at that. We had this very nice descending channel of yesterday's price action, just grinding lower highs and lower lows all the way down. We have broken out of that channel locally. We have back tested that channel locally. It was also the VWAP, and now we're pushing up to the value area high, where this really in this area is going to be our key rejection area. And if we reject, I do expect us to dump back down to $87,500 because there is not a lot of support between the lows that we just made today and between $87,500. So Bitcoin is in danger. I have to say Bitcoin is in danger. And a lot of people were really getting bullish when we were just range trading. Guys, we were simply range trading still, in range trading mode. All we did was come to the highs of the range and take the liquidity to the highs of the range. Everyone from this little pump here is calling for 200K, new all-time highs, this stuff like that. And I've seen this so many times in my years of trading where a lot of people get to start to get bullish inside a larger sideways range when you start to break above, kind of these highs in here. A lot of people get really, really bullish and think new all-time highs are coming, but you just come up to grab liquidity. The market makers trap. First of all, they stop out all the short positions within this last 7-8 weeks, and then they continue the overall bigger market structure or momentum and sentiment of the market, because the momentum and sentiment is still bearish on a macro time frame. From the all-time high, we have been making lower lows and lower highs on the chart. So a bit concerning here for Bitcoin, and we really do want to see Bitcoin, if this is going to be a fake out and we are going to come up to $96,500, $97,000, we want to get back above this value area high today. We want to close our daily candle above $91,500. If we cannot close our daily candle above $91,500, I think we at least see a move down to $87,500. But most likely, even if we bounce from $87,500, we're probably going to reject again around that value area high and continue down here. And potentially sweep out all this liquidity. That I did say last week, when we started pumping last week, I was actually very surprised that the market makers left all this behind. And I said it's highly unlikely they leave that behind before we see a resolution of this larger range. And we still are in this range. We still haven't quite seen a resolution of this range. So we're going to have to see how this plays out. But welcome in Olafray, welcome in Bakito, and Rudelinton, welcome in. Good evening to you as well. Dumb Pop TV, welcome in. Your Schlong 5-to-1 risk reward ratio from 93.5K and 90.3K. Feel like I should have taken more profits on this short this morning. Well, that's a good levels, man. That's decent levels of shorts that you have. Guys, give me just 1 second here. All right, sorry about that, guys. So yeah, it is dire. And actually, look at Bitcoin is starting to reject right now. I just want to check this out here. Did we actually touch that value area high? We're pretty much rejecting from the value area high right now. We are bouncing from golden pocket and an anchored VWAP. This anchored VWAP, so we can look at a couple anchored VWAPs, and I am using the Coinbase chart here. But if we take an anchored VWAP, you generally want to take anchored VWAPs from key lows or key highs. Now, this anchored VWAP that we just touched this morning, I took it from this low here at around $83,800, but you can also pull an anchored VWAP from that 80.5K low. That is at a very important low on the chart. And we haven't quite touched the anchored VWAP from 80.5K, so we could come down a little bit lower, make another low, and touch that anchored VWAP. It's going to be coming in right around $88,800 on the Coinbase chart. Let's check out the Bybit chart here. I just want to see what this looks like on the Bybit chart. But it's not good what we're seeing right now, guys. If you're a bull, yeah, and we did tap the anchored VWAP from the $80,500 lows on the Bybit chart. And another thing, while we're here on the Bybit chart, and we look at this pitchfork that we have been in, this highly respected pitchfork for all of 2025, you can see the major swing levels, the major swing trades were respected at support and resistances of the chart. We are chopping and forming those ranges that I often talk about on this channel, how in larger pitchforks you form ranges in and around the pitchfork band. And we have now rejected the highs of the pitchfork and come down to our pitchfork band, and we are just ranging within this pitchfork band. But I've been saying this ever since this range has been forming, guys. To me, this is a corrective range, more probable, not guaranteed, more probable to be a corrective range before coming down and taking out those 80.5K lows. If this was going to be impulsive price action, like a wave 1, a wave 2, and we're going to shoot up in a wave 3, you would want to see this first initial wave 1, you would want to see impulsive price action. And there is a way to count that as a leading diagonal or a diagonal formation. But because of all the overlap that we were seeing between the highs and the lows, it's not very clean and it's far less probable. This leading diagonal to start an impulse is very, very unlikely and low probability. So because of the way this range started in this area, and also we have to remember within this range, when we were coming up to these 3 highs, every time we were coming up, it was a bearish backtest of our entire bull market trend. So let's zoom out on, let's go back to the Coinbase chart and we'll zoom out onto the 2-day chart. And that bearish backtest, it was our entire Fibonacci channel, which you can see here. Our Fibonacci channel throughout the entire bull market has really been respected, rejecting, coming down to the midline again, and then once we fell back inside the channel, the main pink channel, rejection. Now we've lost the channel, and that the 3 highs of that range that we saw were 3 bearish backtests of our Fibonacci channel. And when you lose a key structure like this, a key sentiment of the bull market like this, you often will see bearish backtests. And we saw 3 bearish backtests, 3 pretty harsh rejections every time we touched that channel. And to me, this range that is formed, because the way it started, it does look more corrective than impulsive. Meaning that we might come up, make one more high and maybe see another higher time frame backtest of this Fibonacci channel. But to me, it's likely that we are going to come down and take out the lows at 80.5K. Just the question is this range going to extend for a bit longer before that happens? Are we going to make a new local high coming up to hit that point of control before it happens? And that's all valid questions that I am going to be paying attention to. And like I said on Tuesday's stream, because we did hold the value area low of our macro range, it is likely that we could come up to 96,500. So if I turn on that macro range, we have held the value area low. And because we're holding that value area low, we now might see a push up to that point of control. It's likely that we could see a push up to that point of control to test that. But even if we do come up to that point of control, I'm still looking overall for a rejection between like $96.5 to like $99,000 for a rejection to continue this move to the downside. It's more likely, in my opinion. Now, of course, in trading, nothing is guaranteed, but what we're seeing within this range to me still looks corrective. Sure, I could be wrong, and if I'm wrong, I'll change my sentiment, and we can still make money both ways, and that's why risk management is so important, because no one is right 100% of the time. We just wait for key levels. We don't even have to know what the price is going to do necessarily. We wait for key levels, and we look for confirmations of trades when we get to those key levels, whether it's shorts from resistance or support, longs from support levels. But we're still in the range. We have fallen back inside of our volume profile of that range, and it's not looking good the way that Bitcoin has, on a very immediate time frame, rejected that back test of the value area high, and now this is the real kind of back test, right? What we're seeing right now, after bouncing from a golden pocket and an anchored VWAP, this is the true back test that we want to see. And if this rejects here, which it's starting to right now, we still haven't come up and actually hit the value area high around $91,500. This is going to tell me what I need to know. And I am still open to looking to add to my short position from this area, with the next take profit level being around $86,500. $87,500. All right, let me check the chat here. R Pink, welcome in, man. Let's go. Thank you for being here, and thank you for modding. Crypto manipulation trader, how is Sui, bro? Yes, we'll look at Sui here. Sui is actually looking pretty good still. Sui's come down to the 0.5 Fibonacci, and it needs to hold. What's the CVD saying? Okay, let's look at our CVD here. So what we have been seeing, actually look at it as we're coming up. Okay, little bit of a short squeeze that happened towards the end here. You can see open interest is increasing. Actually, fresh shorts were coming in just locally. This is on the 15-minute chart. So these were our lows from today. And we did see a lot of longs stepping in towards the bottom down here. So let me go ahead and grab this. You can see in this price action here, we saw a lot of long positions stepping in. And they were fresh long positions because your open interest is increasing. That means new positions are opening up. Your CVD is increasing here. That means they're new market long positions. So we were getting a lot of longs that were longing near the bottom today, near the bottom of our move down today. And we're successfully being pushed up a little bit here. We also did see some shorts coming in, a lot of fresh shorts coming in this area here. So now you could see fresh shorts coming in, and they were, a majority of them were new short positions that were coming in. So we're seeing a little bit of a squeeze. Our open interest is dropping here because we're starting to squeeze out these late shorters that were shorting right into like that naked daily point of control around $90,000. But what we want to see is if Bitcoin is going to reject that value area high at $91,500, you're going to want to see on our open interest or order flow charts, you're going to want to see your open interest start to increase here. And you're going to want to see shorts coming in. Now, if you want a clean rejection here, what we would expect is, now that we found acceptance back within your volume profile, if you come back to back test that volume profile, and like myself, people are looking to short that bearish back test, you would expect to see new short positions. So open interest increasing, your CVD continuing to decrease here. New short positions stepping in, successfully pushing the price down. If we are going to continue to short squeeze up through this, then we would see something very similar with our CVD. Our CVD would continue to drop here, but your open interest would also continue to drop because it would be those late shorters getting squeezed out. And we have some late shorters that were shorting really all the way up to the highs from yesterday, the bearish back test from yesterday of that value area high. This right here was the value area high. And yesterday, you can see when we rejected on that bearish back test, this is what we would actually want to see. Shorts coming in, open interest increasing. So we want to see something very similar as we come up here again. We would want to see open interest increasing, shorts coming in. But right now, as far as CVD divergences go, let's zoom out a little bit here. Let's just go to the hourly chart. Where'd you go? Man, this is all a mess here. And it's expected to be a mess because it was a holiday week. But look at this is relatively flat in here. Flat CVD, pumps and dumps of the CVD, longs and shorts in there. But our open interest has been steadily increasing throughout this last couple of weeks. So in some ways, we could say technically we do have some bullish CVD divergences. If we're looking at these lows at the start of this impulsive price action up here, you can see we do have higher lows on the price action. From this area, we do have lower lows on the CVD with a lot of gross chop in between. And our open interest is increasing as we're pushing up here. So in some ways, this could be classified as a bullish CVD absorption. And that is relatively bullish to see. I would like to see, let's zoom in a little bit more and let's check out more locally. Yeah, I mean, we are even seeing some bullish CVD absorption locally. It's not as strong for sure. And one of the things that I talk about with bullish absorption on the CVD is when you generally want to see a nice steady increase in your open interest. When you start to see a big pump followed by kind of a prolonged drop in open interest, another big pump followed by a big drop, pump followed by a pretty big drop, that tends to invalidate the bullish CVD, or it makes it less likely to play out. So what we are seeing here is technically higher lows in the price action, lower lows in that CVD, and your open interest is increasing overall, but it's not the best look with all these prolonged drops that we're seeing in the open interest. To me, it makes it less reliable of a signal. And oftentimes I've pointed out on my channel, when we do get these less reliable signals with these prolonged drops, the bullish absorption doesn't play out the way we want it to. But technically, you would say, yes, we do have some bullish absorption. All right. So by Schlong, 5-1. I mean, I'm both short and long at the same time. Yeah. Oh, 5K and 1K positions. Okay. I thought the 5-1, that was your risk reward ratio. 5-1 risk reward ratio. But nice, man. That's really awesome. And you're in profit on both of them. So make sure you do take profit partials, at least. Not financial advice, by the way. I don't give financial advice, but if that was me in those positions, I would have taken some profit on, like, you're playing those probably as scalps, $93,500. So you probably shorted this lower high, this off this pump here, which was a nice short into that golden pocket. And I probably would have taken some. So if we have this golden pocket here, you shorted $93,500 this golden pocket once you lost it. As soon as I took out those lows at $91,200, I would have taken a partial profit from taking those lows. Now you can move your stop loss to break even. That's a risk-free trade. And then you said you're long from $90,300, which is right in this general area here. This one's a bit tougher because if you're longing this $90,300, let's just say right in here, your stop is obviously going to go below the local lows from today. And your TP1 would have to be the back test of this value area high where you could reject. Now, that's only a 1-to-1 risk to reward ratio, so that's a bit tough. I think maybe what you were thinking is longing and seeing a break up to the golden pocket at least. So if we pull our golden pocket, it's at around $92,800. That would at least give you kind of a 2-to-1 risk reward ratio in that area. Yeah. So just be careful with this one, because if we do reject from 91,500, it is likely that we are going to continue down to make new lows. So personally, I would be watching very closely what's about to happen right here. If we start to reject that area and start to change local market structure bearishly, I would probably get out of that trade, or at least takes a partial and move my stop loss to break even, knowing that I might get stopped out with very little. And then you could also look to compound your short if we do reject here. You're short from $93,500, compound it, and then look to take some profit in this general area. Okay, yeah, Anon 219, absolutely, man, and thank you for being here. Appreciate doing this analysis for you guys. Jaw Fuel, what is up, man? Happy hump day to you. Welcome in. Is it hump day? Wait, today is Thursday, right? Yeah. Okay. What's up, Jaw Fuel? Good to see you, man. D Crypto, good afternoon to you. I took some profits around 90. Okay, so you did take profits around 91K. So that's exactly what I would have done. Good job, man. That's really awesome. The long is primarily just a hedge against the short. I'm happy to get stopped. Yes. Okay. Awesome, man. Well, it sounds like you know what you're doing with that range trading and scalping short, scalping long, getting into that schlong trade. Very cool, man. Very good. Yeah. I'm still have a little bit of my position open from the swing failure pattern. I think I got in around 93,900. Where was it? It was $94,300. But I'm 75% out. And guys, I took way too much out here because I did think we were going to come up and take out that high one more time. I was looking for another push up locally. Yeah, but can every day be hump day? Jaw Fuel, every day could be hump day for you, man. Every single day. All right. I'm going to check out while we're waiting for Bitcoin. I'm actually going to set a little alert here. And we'll just set an alert real quick at that value area high. And we can check out SUI really quickly. So SUI, guys, I'm looking at the bigger double 1-2 impulse. So we have from these lows here, we have a pretty clear wave 1, wave 2, internal wave 1, internal wave 2, and our big explosion in our third wave here. And now we're looking for a fourth wave pullback before seeing a 5 and then another 4 and another 5. But I'm looking to come up overall to about $2.20. So, and the reason why I'm looking for that, first of all, we did find a nice bottom at the bottom of our pitchfork. This was also a 1-to-1 Fibonacci extinction. If we're looking at this being a larger 3-wave corrective move, right around the bottom of the pitchfork was your 1-to-1 Fibonacci extinction. And this is definitely local bullish impulsive structure. Double 1-2s, a push up here. And we did take the liquidity of your initial dump lows with this low. It would have been nicer to come down and do another liquidity grab, seeing a 3 drives pattern in here. We didn't get that, but because we have a double 1-2 here, 1-2, 1-2, 3, now we're looking for 4 5s, 4 5s, and I'm looking to come up to our bearish pitchfork midline because we're holding the bottom of the pitchfork and we have broken above our pitchfork lower band. You can see the last time we tested that lower band, we rejected perfectly. And then a lower high rejection here, came down to the bottom of the pitchfork again, held the bottom of the pitchfork. This time we busted through the band. So now I'm looking for a bullish backtest of the band. If that holds overall, we're looking for a move up to the midline. Also, I do have a couple other pitchforks that I do want to show you guys on SUI, and one of them being this more macro pitchfork, bullish pitchfork, looking at the more macro bullish structure here, pulled from our last major, I guess you could say, weekly low to weekly high to weekly higher low. And we, formed a little bit of a range above the pitchfork, but we fell back in it. You can see once we fell back in it, let me hide the bearish one real quick. Fell back in it, bounced on that October 10th dump from the band, the upper band, bearishly back tested the top of it, rejected. Then we flipped the band to resistance and we came down to the midline. And look at how the midline is holding on this bullish pitchfork. Now we do have the upper pitchfork band just above us. And you can see where our purple box of resistance is at 220 is also the top of the band, the top of the pitchfork band. So now if I turn on our bearish pitchfork too, you can see we have some very nice confluence of not only our bearish sentiment, but our more macro bullish sentiment. 220 to 227 is looking like very important resistance above us. Very, very important resistance where I would be potentially looking for swing short opportunities from this area. But I'm still looking overall because our bullish market structure and our bullish impulse hasn't been invalidated yet. I am still looking for some 4-5s to come up here to finish this double 1-2 impulse. So on pullbacks, I am looking for long positions. And if we zoom in here now on the 2-hour time frame, you can see that I have this box marked out. It is, we do have a naked daily point of control at 168. We have our pitchfork band, the bullish backtest of that pitchfork band. And we have a daily level, I believe it was. Let's see. No, not a daily level. It was the 0.5 Fibonacci. 0.5 Fibonacci. So your common wave 4 targets, if this is a wave 1, wave 2, internal 1, internal 2, big third wave here, in a fourth wave, you retrace between the 382 and the 0.5. So that 0.5 Fibonacci is between our naked daily point of control and our pitchfork band, the bullish backtest of the pitchfork band. So we could come down to 170 and then bounce from 170, and we would want to see a small 5-wave impulse to take out these highs. After that 5-wave impulse, let me turn these levels off so that this is not as messy of a chart. After that 5-wave impulse, you're going to get another rejection, creating your second wave 4, and you should be looking at a 3-wave corrective move. And then we should see another 5-wave impulse to finish it. So you would have your 1, 2, 1, 2, 3, 4, 5, 4, 5 coming up to the top, finishing this overall impulsive structure here. And then from that area at 220, I will be looking for shorts. Of course, I'm not going to just set a limit order there and hope it rejects. I'm going to wait for confirmation. If we have bear divs as we're coming up there, this would allow us to form some nice bear divs on the chart. But if we do have bear divs, I would be looking for a short, at least to back test between the golden pocket and 786 of this entire impulse. So I'd be pulling it from the lows of the impulse to wherever those highs are going to be. And I'd be looking at that golden pocket, which would be in confluence with the pitchfork band. So, in terms of our, let me just get rid of all of this real quick. If we do come up overall here and reject, then you would expect, as far as pitchfork trading goes, you're rejecting from your midline of your bearish pitchfork. You would expect to come down to backtest the band again, a higher time frame backtest to the band, and that would be where your golden pocket would be as well. So that's kind of what I'm looking at on SUI. And so far, I do have to say, this move down looks pretty corrective here. It is starting to, with this push up that we've seen in the last couple hours, potentially a 5-wave, 1, 2, 3, 4, 5. And if we move down an impulsive structure, a 5-wave impulse, that's not good. Because then you could expect a lower high before creating another 5-wave move down and a lower low. And that would be your bigger A, B, C corrective move. We don't want to see us hitting the golden pocket. So if we pull, let me get rid of this theoretical golden pocket. If we pull our golden pocket from the lows of wave 3 to the highs of wave 3, this golden pocket at 160, if we hit $1.60, it will invalidate this being a bullish impulsive structure. It will invalidate the double 1-2, a 1-2, 1-2, 3, 4, 5, 4, 5. You know what I mean? 4, 5 taking out this high, and then another 4, 5. If we hit this, it invalidates it. And now we have to look at this as a 3-wave corrective move before potentially dumping all the way back down. And that is kind of what we're looking at on Bitcoin as well. Now, Bitcoin's is a little bit different. Bitcoin's is a much larger move, but we were looking at this entire kind of past week and a half of price action being a potential 5-wave impulse to the upside to come up to your point of control. But because we have now hit that golden pocket, guys, at $89,000, because we've hit that golden pocket, it is not looking good. And even if we are looking at a larger, remember a couple last week, I was talking about, let me get rid of these here and hide this range. We were talking about the potential larger 3-wave structure that we could see before dumping down. And we were looking at a complex WXY correction. So, a 3-wave move up in a W, 3-wave move down in an X, and then a 3-wave move up in a Y, 333. Maybe I was thinking we might come up to that point of control, but at least we grabbed the range high liquidity. And now after that 3-wave corrective move, you could start to impulse down here. And we don't want to see that necessarily if you're a bull. You definitely don't want to see that if you're a bull. But that means that this could be the resolution of a much bigger complex correction, and it's over. And guess what? New lows coming below 80.5K. The fact that we've hit our local golden pocket and invalidated a wave 4 here is not a good sign for the bulls. All right, let me check this chat here. Super Mario, welcome in. You wanted to ask the difference about CoinGlass. What is the difference between Model 1, Model 2, and Model 3? Well, so Model 1 heat map, it's looking more locally. Like you can see how it shows you more of the local internal liquidity, like smaller time frame liquidity. Yes, you can change this to look at, 3 months, 6 months, a week, month, whatever time frame you're looking at, but it shows you more of the smaller pockets of liquidity. And then I believe as you just go up from Model 2 to Model 3, it's showing you you're generally zooming out on the liquidity pockets. Now you can also change your threshold of liquidity by adjusting this dial here. You can make it, you can go so it's looking at only the most liquidity. I know some people that put it down here and it's like, well, it's going to show you all those pockets. So now you see how I have it at 0.6. If we go into the Model 1 heat map and we turn that down to 0.6, it's going to show you within that bigger cloud of liquidity on the Model 2. See how this cloud, it all looks like one big liquidity cloud. But now if you zoom into the Model 1, it will show you where the liquidity pockets are within that cloud. So it's kind of like zooming in on the liquidity. And the farther you come out, Model 2, Model 3, it just gives you like a wider scope of where that liquidity is. And I like the Model 3 heat map the best, to be honest. I do like that Model 3 heat map. To me, it's been the most successful for me looking where that liquidity is at. Okay. Anthony, welcome in, man. Been following you for a few months after seeing you around Jason's streams. Truly enjoy your analysis. Thank you, man. Dump Hop TV, thank you. You guys, I do have some exciting news coming up soon related to Jason, but I will wait to talk about that. But yeah, I love Jason. I love that community so much. I was part of that community, and I still am part of that community, by the way. I have been part of that community for 7 years now, 6, 7 years. And I love Jason. He's a great, great trader. Sol just broke the 1 hour structure bullish again. Okay, let's check out Sol. Sol has been definitely pumping against Bitcoin. Okay, here's the thing for Solana, guys. Just like we were talking about these local impulsive structures, wave 1, wave 2, wave 3, our wave 4 target was our support zone, right? It was our point of control of our range, our 8-week long range between so let me back up here. And I know some of you, like some of you guys on the regular streams have heard me say this many, many times, and you're probably getting sick of it. But we're just ranging between our 2-year long range point of control and our 2-year long range value area low. It's our macro range, our upper range. on the daily time frame, if we zoom out to that daily time frame, it is our more upwards structure. You can see clearly this was impulsive move to the upside. Very clear impulsive move to the upside. After that impulsive move, we kind of been ranging sideways for almost 2 years now. A bigger daily range, or even a weekly range, you could say, for 2 years now. We have come down to the value area low of that range. We are trying to hold it as support, and we're ranging between that value area low and that point of control of that 2-year long range. And this is where we would expect to see some sort of accumulation. If we're going to see accumulation like a tap 1 here, a tap 2 here, a tap 3 here, and then we're going to break above that point of control, flip it to support, and then see the expansion where we can push up to the value area high. This is a possible accumulation range in here. So we're analyzing this range. This is the price action that is relevant to us right now, that we do want to study and focus on right now to determine whether this is going to be accumulation in here, whether this is going to be accumulation in progress, or whether this is going to be distribution or a redistribution where we distribute back down and, take out these lows, but possibly even come much lower and continue a larger move down. So that's what we want to analyze. Now, zooming into that 4-hour chart, if we're looking at this price action in here, we want to look at the important liquidity levels and the important volume levels within this range. So let me go ahead and hide our macro range now that we're zoomed in and focused on what we want to be focusing on. And we're going to turn on the range of all this sideways price action between the point of control and value area low. You can see the other day we came up to the value area high and to our pitchfork band, and we rejected. But we're coming down to our support level, being now that we flipped the point of control to support of our 8-week long range, it's going to act as, now that we've flipped above it, it's going to act as support, and then we might be able to make a move up to take out your range high liquidity, just like Bitcoin just did. So, and we're looking at this price action from the lows of the range to see what type of price action is this. Is this more likely to be a 3-wave corrective move and we're going to dump? Or is it more likely to be an impulse, a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5 to take the liquidity of the range highs? So right now, we can look at the volume here, and we did see some pretty nice spikes in volume as we were pushing up at the start of this impulse here. And since the highs of the move, volume has been overall decreasing here, meaning that this is probably more of a corrective move before pushing up. And so if it is a 5-wave impulse, a wave 1, a wave 2, wave 3, a wave 4, and a wave 5, making new local highs, then where's our support level coming in? And your support level is between the 0.382 and the 0.5 Fibonacci, pulled from the lows of 3 to the highs of 3. And let me see, I think I have that on the chart, not this guy. So, and it does depend on how you pull this. Actually, that's an old one. That needs to come up to here. Yeah, so you can see that we have now come down and hit that 0.5 Fibonacci. Get rid of this. Get rid of that. If we're looking at, now there's a couple ways we could count this bullish structure. So from the lows, you could count this as a wave 1, a wave 2, another internal wave 1. You took out the highs here, and then an internal wave 2, and then this could all be part of your third wave. Or you could look at the more macro structure and just say that this is going to be a wave 1, a wave 2. All of this is a wave 3. Now we're looking for a 4 and a 5. So we could pull it from the lows of 3 to the highs of 3. You can turn on your your wave 4 targets between the 382 and the 0.5. And that's initially how I had this count. Wave 1, wave 2, wave 3. We're in the wave 4 now. Or if you want to look at the double 1-2 impulse, you could pull that wave 4 targets like this. Either way, we're bouncing from our target area between the 382 and the 0.5. So let me delete that one. You can see we wick down to the point of control, but we're overall holding the 382 of our bigger wave 3. Or if we want to go with the double 1-2 impulse, we can look at you're bouncing from the 0.5 Fibonacci pretty much to the exact dollar. And it's also your point of control. This was our area of support. By the way, guys, I did short, and many of you were live with me on Tuesday as we were shorting this. we shorted this 0.786 Fibonacci right there. We had our bearish break in market structure. Right here, we broke market structure bearishly. So now we're expecting a lower high between the 786 and the golden pocket. And we did come right up to that 786, and we rejected exactly from that 786. I told you guys during the stream that I'm looking to short this to bring it down initially to 135.5, where we did have a naked daily point of control. And my second take profit was going to be this point of control. And I haven't even checked actually locally. It was a limit TP order that was set there, but I'm pretty sure I hit my TP on that. And another reason why we're looking at this structure being impulsive from the lows of the range right here, because if we turn on our 1.618 Fibonacci extinction, we rejected exactly from that 1.618 Fibonacci extinction. Now, the way that I counted that, though, with that 1.618, a wave 1, a wave 2, internal wave 1, internal wave 2, 3. If we pull a trend-based Fibonacci extinction from the lows to the highs to your higher low here, and we turn on our 1.618, this one is a little bit lower, and you can see it's not as respected. That's why I was leaning with that double 1-2 impulse. It does look like the double 1-2 impulse is being respected more, because also you can see your 0.5 on the double 1-2 impulse was tapped perfectly, and that's where we're bouncing perfectly. Now, money flow on the 4-hour is nicely curving up again. We did get the green dot on Market Cipher B. On NAMI, you have bull divs in here. Lower lows here, higher lows here, 4-hour bull divs on NAMI, which NAMI is quicker for confirming those divergences and the money flow. Let's go on to the 2-hour. 2-hour here. Okay, no bull divs on NAMI or Market Cipher B. Let's look at the 1-hour. 1-hour bull divs confirmed into our support level. Lower lows, higher lows, higher lows here. So we have bull divs confirmed as we were coming down to support. Now we're getting a really strong reaction from support. And like Jaw Field just said, we have now just broken hourly market structure bullishly by taking out this high. That is a bullish market structure break. So now, because we just broke market structure bullishly, if we do retrace from here, we could be looking for a higher low on the charts to enter a long if you guys didn't get in that long position. So now we can throw on our golden pocket to 786 area. And if we come down to like 134.8 to about 134 in this general area, we could be looking for a long to now bring up, and I would be looking to take out your highs on that TP. And remember, with this being a wave 4, in our wave 5, we're looking to come up to take out these highs. So your overall higher time frame bias is to take out those highs once more. Okay, Luciano, welcome in, man. It's nice to see you as well. How's your configuration on PVP indicator? Yesterday with your TA, it showed me another naked weekly POC at a different level. Okay, so I'll show you my settings on that. Now, here's the weird thing with with Trading View. So first, let me show you my settings. So I have it, just the POC is extended. So you click that, it's going to extend the POC. But I have my row size at 200, I believe. Where's that at? Inputs, 70% is the value area, and then row size 200. Extend POC right. And then, of course, you're just coming in here and changing it to daily or weekly or whatever. But I will show you something that's very fascinating with Trading View. And this is kind of a glitch with Trading View. But if I come in here onto the hourly chart, and let me turn on my naked daily points of controls, you can see I have my naked daily points of controls marked out. And I don't know why there's 2 here. Let me get rid of one of those. Naked dailies, naked dailies. This naked daily was there. It's been hit. Now, I left this on the chart because I was going to show you that today. That was where the bounce, that was my TP1 from that short right up here. That was my TP1. We hit that, so I can get rid of that now. Let me just get rid of this locally. And then today's naked daily point of controls here. But now, if I zoom out, let's see, say I zoom out onto the 8-hour chart. Your naked daily point of control should still stay the same no matter what time frame you're on. And it looks like here on the 8-hour they are. But if I go to the 4-hour, oftentimes it will shift those naked dailies. And that's like a glitch on TradingView. Okay, not of course in this case it's not working, but it happens a lot, guys, where if you shift the time frame, and you'll also notice that on volume profiles. Let's do this. And then let's go to the 1-hour. All right, TradingView is making me a liar now, but I promise you guys, TradingView does have this glitch where sometimes it shifts the volume, the naked daily point of control, depending on what time frame you're on. So what I will say to you here is, when I'm marking out my naked daily points of controls, I like to mark them out on the 1-hour chart. So I'll go to the 1-hour chart, I'll turn on my naked daily points of controls, and I'll mark them out that way. Now, when I'm looking at naked weekly point of controls, I will generally go to the 4-hour chart, and I will mark out my naked weeklies on the 4-hour chart. So let me turn off the naked dailies. We'll turn on our naked weeklies, and I will mark them out on the 4-hour chart. You can see a naked weekly here. Now, this is a naked weekly, but it's the week hasn't closed yet. It's only Thursday. That's why I don't have this marked out yet, because it's not confirmed. And this guy is old. Is that old? See, now, check this out. On the 4-hour chart, that's been tapped. Let's go to the 1-hour chart and see if that's tapped. On the 1-hour chart, it has not been tapped. So that's why I like to use the 1-hour chart. And if we look at other charts, see how on the 1-hour chart, it is still naked. It extends all the way across. But if I move to the 4-hour chart, it shifts it down a little bit and it says it's been tapped. So I guess now recently I have started marking out both of them on the 1-hour chart. And if we go to a different exchange, on Bybit, let's check on Bybit how those naked weeklies are. It's still up there, right at $96,000. Let's on the 4-hour chart, it's still naked. And on the 1-hour chart, it's been tapped. Like, it's just a weird thing that TradingView does sometimes. I really don't understand. I see it as a glitch. So it depends on, you just kind of play with it a little bit. And I mean, just 96K is an important level anyways. $96,000 to $97,000. Very, very important resistance. So it does get a bit muddy with this PVP indicator. And I know there's other tools you can use, ExoCharts or ATAS, those order flow templates, order flow software that you can use to find those naked daily and naked weekly points of controls. Or there's even indicators that you can look at naked POCs. Naked POCs. Let's see here. So I think this one, the Chart Champion ones, gives naked POCs. Let's look at this. If it will load up here. Let's see. Oh, ZMX, welcome in. And CJ, welcome in, guys. So good to see you in here. All right. I don't know what's going on with that one. There is indicators you can use to find naked points of controls as well. So naked intrabar POC. I don't know if I've used this one before. All right, maybe it's showing you some POCs, but that looks like hourly POCs or within each bar. It's showing you, so depending on your time frame. So if you zoom out to the daily time frame, it should show you your naked daily POCs. Yeah, let's go on to the, Coinbase where we can mark those out where they're already marked out. So let me turn off the naked weeklies. We'll turn on the naked dailies. Yeah, but I guess it does show you your naked dailies, but it shows you them within each bar. So this is the POC for that day, but I'm not so sure it's naked. Yeah, I don't know, to be honest, about this indicator here. Periodic volume profile is the indicator I use. Just know that. Okay. Let's see. It look at that, another dump. Yeah, CJ, remember how we were talking about this, man? I even said last week when you asked me 78K or are we going to 100K? I said no, it's likely we could come to 96K first or 96.5K, but I am still looking eventually to come down to take those lows because this entire thing looks corrective to me. Now, the thing is we could still make new local highs. It is more bearish now that we've dumped back inside our volume profile. A lot more bearish now that we've dumped back inside the volume profile and grabbed the liquidity and saw a swing failure pattern of the range highs. But it is still possible that we could continue to grind up here until we hit 96, 97 before seeing that dump. But overall, I do expect this overall bearish market structure to continue. And I'm actually expecting it to continue until we take out our 74.5K lows. And the reason, there's a few reasons why, but we did have some massive bearish divergences on the daily time frame, bear divs on the daily time frame, bear divs on the weekly time frame, bear divs on the monthly time frame, bear divs on the 2-month time frame. I mean, we had bear divs all over the place in this distribution range up here. Really, this entire move up here, creating multiple drives of bear div on a high time frame. And yes, on, like, say, for instance, on the weekly time frame, we have a triple drive of bear divs. You know, high, higher high, higher high, higher high. We have our lower highs in here going all the way back to 2024's all-time high. This was the all-time high in 2024. Bear divs on the chart. Money flow draining out overall. About to cross into the red. But you will see bounces along the way, especially if you get a big weekly green dot or that momentum wave bottomed out on the weekly. You expect some bounces, you know, and I gave you guys an example of this a couple weeks ago on Tuesday's live stream. I believe it was Tuesday's live stream or yesterday's video, but the last time we saw a big weekly green dot, look at this, was back in July of 2022. Big weekly green dot confirmed on Market Cipher B. And from that green dot that we saw on Market Cipher B, we saw a few weeks of move up. You know, what was that? Let's see here. When did that confirm? That confirmed here. So we got 1, 2, 3, 4, 5 to 6 weeks up. And, you know, we had a green dot here. 1, 2, 3. We're on the 4th week up right now after that. But here's the thing. If we look at that fractal and we look at this from the lows, we just look at this and we kind of adjust this to make it equal to our price action that we're seeing now. It looks like a very similar move, doesn't it? A little bit of a kind of slow grind, corrective grind up, almost like a bear flag grind up. Take out the highs, you back test some very key structural trend structure for the bull market, and then you're going to dump. And look at where the dump ends here as far as the fractal goes, coming down to 78K, which is our next major support level. And then even potentially coming down to 74K. That's what we really want to see, is coming down to take out those 74K lows. So very similar price action here. But the bearish divergences are still in charge over one weekly green dot with no bull divs. You know, this green dot will give you a little bit of a push up, but these overall triple drive of weekly bear divs is still taking time to play out. It still hasn't fully played out yet. Money flow hasn't even crossed over into the red yet. The last time we saw weekly bear divs was at the top of the bull market, 65K, 69K highs, bear divs. And then look at, after you cross into the red, was at the top of a little move. That was another sideways and up range here, just like the sideways and up range that we're seeing right here. And then you continue the really aggressive bear market. So, and that was the cross into the red. So are we going to see maybe 1 or 2 more weeks of a move up? Once we start crossing into the red, this thing is going to start dumping and confirming a bear market here. Hidden bear div, bear div, bear div. I mean, like, just, you know, bear divs on the money flow. Look at this bear div on the money flow. Just a lot of macro bearish signals in the market, meaning that this could have been a larger top up here. Now, fundamentally, Bitcoin and crypto is still bullish in my opinion. And I also talked about how in 2022, and by the way, I saw another influencer talk about this today, but we've been talking about this for about 2 weeks now, at least 2 weeks. We were consolidating, and sure enough, what happens as soon as January 1st hits? Right here. Let's throw on that vertical line. Right here, January 1st of 2023. And then look at, you get a nice bullish aggressive move up as soon as the new year hits, because all the major players are starting to trade again. All the major players they've reset their portfolios. You know, they stopped trading at the end of the year for the holidays, but also for tax reasons. And then they start to reopen their next year's plan. You get a nice move up. Well, what did we see? And by the way, that was at the end of a bigger dump down. Now we come over to 2025, and we've been dumping for months. And then as soon as the new year hits, boom, you get a big push up. Now, it hasn't followed through like our 2023 move, but this was also at a different phase. We were at the end of a year-long bear market, not at the end of a 3-year-long bull market. So this could have been a nice little push up for a few days and then a dump. We'll see what happens. What button do I need to press, red or green? Well, I'm looking to press red soon here. If we do reject from 91,500, the back test of this POC, and dang it, it looks like we're starting to. So ZMX, I don't know if you were here at the beginning of the stream, but what we were looking at was this volume profile of the past 7 weeks, 7 to 8 weeks. We broke out of it only to take the liquidity of the highs, and now we're falling back inside of it. First of all, we tried to bullishly backtest it and continue, but we couldn't. We bullishly backtested it and made a lower high, and then we broke underneath it. So because we closed yesterday's daily candle underneath it, we expected new lows today. We got them. Now we're looking for that higher time frame backtest of that value area high after bouncing from a golden pocket and an anchored VWAP. If we reject here, which looks like we are starting to reject here, I'm expecting us to come down to 87,500, around there. We have this support box below us. It's a couple of different confluences. So let me show you guys that support below us. So in this general box here, and I should probably mark this out, we have a weekly level at 87,875, I'm going to say. Let's just say 87.8 or 87.9 because it's closer to 0.9. We have a daily level at 87,500. We have our range point of control of an 8-week long range at 87,500. We have a naked weekly point of control at 87,500. I can show you guys that right now. And of course, it's not going to. Naked weekly point of control. Okay, I guess that's not a naked weekly. Let's see here. Naked daily. I'm going to delete that. It was a naked daily point of control for sure. Naked daily point of control. And I will show you. Naked daily point of control as well. So $87,500 to about $87,900. This box in here is our next major support level that I'm going to be looking at. It's also your golden pocket. I believe it's this golden pocket. No, this one here. Golden pocket's just above that at 88. Let's see, is it? And that one, that's also our next important support level below. Our macro golden pocket pulled from the range lows to the range highs. Golden pocket value area high at a value area low, excuse me, at $86,000. There's also a daily there as well. So those, you can see those are my two boxes, real nice support levels below us. And then, of course, we do have some support at $83,600. Liquidity grab into the 786. And I believe there was another level there. Let's see. Yeah, I guess just the liquidity grab into the 786 is the next big level I'd be looking at. Okay, seems like a critical point here. Potential for small squeeze higher, but conflicting signals. Yeah, it does. We could squeeze higher. Let's check our order flow again right now. I mean, we had a lot of shorts coming in right here. You can see in the last towards the bottom of the move today. I still don't get why people, we've been grinding down all this way, and then people tend to short at the very end of the grind right here. You can see that fresh shorts coming in. Fresh shorts coming in towards the bottom. So this move up that we saw, it started with some longers that were longing that, I believe the point of control. Let me go to Bybit's chart. And if we looked at that point of control, let's just pull it. No, it's at 87.5 here too. Huh, interesting. I mean, it's your anchored VWAP that people were longing. Anchored VWAP, and it was a golden pocket. Golden pocket, anchored VWAP right here. So a lot of people were longing the golden pocket, the anchored VWAP tap. So we did see some longs coming in at the bottom. You can see longs, and they were fresh longs coming in at the bottom. But and then it started to squeeze. This is all open interest dropping, and of course, well, yeah, in some ways it's longs getting stopped out too. It's just been a little bit of a mess today in here, but no real edge on your order flow here. CVD divergences. We're at least not making bearish CVD anymore, so that's good. The bearish CVD that we were seeing in this general area has stopped. But once again, we are rejecting from that value area high. Another thing here, as far as our pitchfork band goes, we bounced from the bottom of the pitchfork band, tried to break above it. We saw a small little range in here, couldn't break above it, fell back inside of it, got above it again, another range in here, fell below it, range in here. This was all during the holidays, or as you were coming up to Christmas, I should say. But we tried to break above it. We couldn't, and we tried to hold it to support when that bounced. That was at the value area high, and that naked daily point of control, we couldn't, and now we're back underneath it. So once again, to see a back test of that area, now that we're back underneath the pitchfork band, and that pitchfork band, if we pull that volume profile again, you can see the value area high is right at that pitchfork band, at least on Bybit. It's a little bit higher on Bybit. Coinbase, it's at 91.5. On Bybit, it's about 91.7. So do we see this continue to kind of grind up here until we get to 91.7-ish? If we reject this area, I am going to be looking for shorts, or to add to my short. I'm still in the short, looking to add to it. Or you could open a new short and look to take it down to 87.5. Okay, yeah, and it does seem like a critical point for sure. Slick Shoes, thank you for being here, man. And yeah, I'm a marketing guy. I'm shocked you don't have a ton of subscribers and likes every day, to be honest. Well, thank you for that. Thank you for that comment, man. I do appreciate that. My YouTube channel now is only a year long. I remember I hit my year-long anniversary. I saw it, I think, last month from YouTube. They sent me this thing saying, hey, your channel's been live for a year now. Like, congratulations. I don't know if I want to deal with the headache of that, and part of the reason most of the reason I do YouTube, guys, is not for money or to gain a bunch of subscribers and stuff like that. I was part of Jason's community for 6 or 7 years. I was very active in there, and I posted a lot of my updates in there, and a lot of people really loved them and would tag me every single day and say, hey, Divine Hood, please let us know what's happening here. And so I just I kind of fell in love with sharing TA and just discussing TA with fellow traders that understand what they're doing, or just helping people learn as well, because I truly believe if you put out good, you'll get back good as well. And so Jason one day said, you need to start making videos yourself. And he was the one who actually, the whole reason I have this channel is because Jason pushed me to do it. And then I did, and the rest is kind of history. Now, yes, I would like to gain more subscribers. I would like to gain more traction on the channel, grow. By the way, guys, while we're talking about that, really quickly, I know this is a pain for some of you guys that watch every day, but I do want to discuss the partners of the channel. So the main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link in the description below, you'll get a minimum of 20% discounts on trading fees, and you can actually earn up to 40% if you deposit some large amounts into the exchange. They're offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And they're offering some of the best initial deposit bonuses in the entire industry. Like a $100 deposit, you get a 50% deposit bonus. And I have not seen another exchange that offers such a high 50% bonus on a $100 deposit. So if you're interested in joining, links in the description. I've also partnered with BYDFI to create a Telegram community where I post, like earlier today, I said, guys, watch for the bearish backtest of the value area high. Yesterday, I post what I'm thinking in the market, trade setups in there as well. So if you're interested in joining that Telegram, all you have to do is, it's free. It's a private group. It's free, but you do have to sign up with BYDFI using my affiliate link and deposit $100 into the exchange. The $100 is your money to trade with. You're just depositing it onto the exchange. You can get the 20% discounts on trading fees. You can get the $50 bonus if you KYC. Once you've done that, there's a Telegram link in the description of this video. Click the Telegram link and type in /verify in your user ID, which will be right up here. And then that'll get you access to the Telegram community. And once you're in, you're in. The second partner of the channel is NAMI Trading. And NAMI is this momentum and money flow indicator down here. And like I show you guys on all of my trades, as we're coming up to a key resistance area, I'm looking for divergences. Like if we're coming up to resistance, I'm looking for bearish divergences on the chart. Now, the great thing about NAMI is if you're not so good at reading those on your own, it kind of tells you bear divs here. So, as we're coming up, grabbing liquidity of the range highs, you have confirmation of some bear divs. I use it for my entry and exit confirmations on trades, and I use it to stay out of bad trades potentially. NAMI's been a really, really great tool to help me maximize my profits and help me stay out of bad trades and stay in good trades. So for me, it's been invaluable. And yes, it is a paid indicator, but I have partnered with NAMI to get you guys 50% off. If you use my affiliate link in the description and the discount code DIVINE50, you can get 50% off. And for me, it is more than paid for itself by helping me out make profit in trades. And then lastly, I have Bybit and MEXC, two other exchanges that I partnered with, really great exchanges, both offering some discounts on trading fees, and Bybit's offering $30,000 in futures trading bonuses, up to $30,000. And then the MEXC is offering a 10% initial deposit bonus, up to about $1,000. All right. That's it for that, guys. Let's get back to the TA here. Yeah, we're rejecting. We're coming up. Even on Coinbase, we still haven't quite hit the value area high, which you can see it's 91,470 on Coinbase. On Bybit, it's about 91,700. So a couple $100 difference there. And we could bounce from the VWAP right now and then make that other move up. And that would give you that kind of 3-wave corrective move before potentially rejecting and coming down to 87.5. So there is a potential we hold locally right now and continue to move up. Actually, I want to check out our 5-minute time frame. How does this look? Nothing really here. Yeah, we are creating some bull divs on the 1 minute. You can see, very slight on Market Cipher B, but look at on NAMI. Bull div, bull div, bull div, bull div, and about to confirm. Well, not, it would be a trigger wave now. Yeah, some pretty nice little. So we might see a little bit of a move up. This is what I'm talking about, though, guys. Look at this is our volume profile. So on the 1 minute chart, it's showing our value area highs at $90,800. But if I zoom out to like the 15-minute chart, it's back up to where it's supposed to be at 91.5. And then every other time frame, it will be at 91.5. 4 hour, still 91.5, So you do get some wonky things with Bybit or with a trading view, excuse me, sometimes. All right, I know I'm a little bit behind in the chat. Let me just catch up here. Yeah, and thank you, Glasshopper. Thank you, Slick Shoes. I appreciate those comments, guys. Good afternoon, Wanderer 5813. Welcome in, man. Okay, you were doing the same with the 1 hour daily, 4 hour weekly. Awesome. Luciano, that sounds good, man. It sounds like you know what you're doing there. So great work with that. Yeah, and I get frustrated with those naked points of control, how they change sometimes like that. To be honest, you're better at controlling emotions than me because that pump made me unsure of the analysis, which is mostly the same as yours. Yeah, the thing is, CJ, I get it, man. And I was starting to get bullish too because we broke the value area high at 91K. I was talking about how this was the real big resistance. It was our golden pocket. It was our anchored VWAP. It was our value area high. And I said, if we break this, we're for sure going to come grab the liquidity of the range highs and potentially come up to 96, 97, 96 and a half to about 97K. But my overall macro bias, even if we came up there, was for a dump after that. We can locally be bullish, like within our 7-week range or specifically from like Christmas. We can be bullish locally within this structure, but overall on a macro time frame, be bearish. So we could be scalp to day trading longs while this momentum is bullish, but still be looking for swing shorts at key resistances. And a swing failure pattern of a range high is a key resistance. So you swing fail that. That's why I shorted that. It was really easy to see. We had bear divs confirmed. We grabbed the liquidity of the range highs, and it's like, why wouldn't you give it a try? Especially if you're already hedged long on some day trades from down in this area. And that's where derivatives trading is really nice, guys, because we can schlong, we can hedge ourselves. We can long from lower, short from higher, and whatever happens, we're still going to make profit. And, you obviously want to manage those, take a partial TP, move your stop loss to break even. But that's what's great about trading. And then it's just about discipline and emotions, which, by the way, trader, I don't think you ever truly master it 100%, especially if you're trading with large amounts of money, so that's why risk management is so important. All right, I should have listened to you in November. I disagreed. Well, ZMX, it's all good, man. You had your analysis, and there's no I'm not wrong or right if a certain thing happens. Even if I'm calling for, let's say I'm calling for this to be a corrective range and then we dump really bad, I'm not going to come in here and say, guys, I told you so, I'm right, because I truly don't know. It's just probabilities. We're going with probabilities. And so I know some traders that pop on and, they think they have this most elitist attitude ever and say, oh, if you follow my Discord, you're going to never, you'll be the best trader in the world and this and that. It's all about probabilities, and no one actually knows what the price is going to do. And that's why it's just about trading good probability trades and having discipline. Overall, you probably will be right more than wrong. Not 100%, not even probably 70, 80%. But as long as you're using good risk management, you can even lose 50% of your trades and still be profitable. And you don't have to know what the price is going to do. I know a lot of newer people will come in and say, guys, what, should I long or should I short or something like that? And it's like, it depends on what time frame you're talking about. It depends on how long you're planning to hold that trade, what levels you're planning to hold it up or down to. So it's so much more complicated than that. Historically, 1 week is bullish and week 2 is a correction. Okay, let's see. What was that for? Yeah, 1 week is bullish and 1 week. Yeah, and there has been a lot of pump and dump in this year. Pump, dump, pump, dump, pump, dump, pump, dump. This pump has been a little bit different and a little bit more aggressive for sure. But now, are we just going to dump it? Are we repeating a larger fractal of all of this? Yeah, pour one out for the late longs. Was the weekend low? Okay, wait, weekend low from last weekend. Yeah, I see. Okay, this general area, weekend lows. Awesome, man. Luciano, I didn't even have that marked on my chart. So very nice there. Guys, weekend lows and weekend highs often get taken out because it's only pretty much retail that's trading on the weekends. The big guys aren't trading on the weekends. And so the market will generally self-correct itself and kind of fill those imbalances that are created over the weekend, especially if it's a major high or a major low. So that's why I do pay attention to week. You guys hear me all the time on this channel talk about weekend highs and weekend lows. And even like on holiday lows and holiday highs. Sad 2725. Thank you, man. I appreciate that comment. I see a lot of you guys are super supportive, and I really do appreciate so much of you in here, and so much of you also are just humble guys that really want to learn and trade. And a lot of you guys know just as much as I do. You just might have different strategies and stuff. And the thing is, when you build a community, it's not like there's one person that is better than the other. Everyone has different styles. And when you get a bunch of good traders that all have different styles, but kind of can line up the TA, it makes for really good overall success within that trading community. And I've seen that with Jason's community. I've seen that with Andy and Bitcoin Consensus, that community. Coons Trading, he's got a really good community. So that's just kind of what I want to do as well. And I'm friends with all those guys. They're all really great people, I think. Yeah, Bybit is not EU friendly for sure. Any advice? What I would say is just join a different exchange, man. There's plenty of other exchanges out there, and try it out with a low amount of money for a few months, 3 to 6 months, and see how you like it. But there's plenty of options out there. Like, I can't trade on Bybit. Bybit is a partner of the channel, but I don't trade on Bybit because I'm in a restricted region and they won't accept me. Even with my Palu ID, they won't accept me. So I don't trade there. I just use other exchanges. There's plenty of non KYC exchanges, and there's plenty of alternatives out there. Okay. Yeah, don't call him a genius when he wins. Don't not a loser when he loses. Exactly, Travi Trades. And welcome in, Travi Trades. And Tiki Taku, welcome in, guys. Shirley Fortress as well. Let's see here. What is this? STEF W PLS. Okay, let me pull it up on this here. Let me bring this over real quick. Liquid staked ether 2.0. Is that what you're looking at here? Man, it looks, I mean, it's pumping like crazy right now for the past couple of days. You did kind of find a bottom in here, and this spike up is on a nice big amount in volume here on this token, liquid staked Ethereum, it looks like. You're rejecting from a daily level, your last daily, and grabbing liquidity. Actually, did you grab it? Let's see here. No, you haven't grabbed the liquidity quite yet, but you are rejecting from a daily resistance in here. The move up is nice. So this, obviously you broke local market structure bullishly. We're on the daily time frame here, but you took out some nice highs in here. You took out all these highs. You took out this lower high, took out this lower high. So you're definitely breaking market structure bullishly. Now, because you've broken market structure bullishly, what you could do is you could pull your fib from the lows of the move to the highs of the move, and you could look for that retrace on this. Let me just turn. I hate these backgrounds. And let's do that. So, if you retrace to this general area in here, you might be looking for between the golden pocket and the 786, because this is nice impulsive price action to the upside. Even if you reject here, you're going to be looking at this as a potential wave one and then a wave two, and then you would want to see your big wave three. And you'd probably want to take out all this liquidity in here, maybe even this high here. Actually, that would probably make sense to take out that high. After you take out that high, though, I'd be very careful. And it does look like this thing, like, because you saw a big pump here. And then you retrace to your golden pocket 786. You bounce, but you made a lower high, and you kind of made a triangle in here. This triangle that was forming, and then it broke down. I don't know what this is or why it's has this bullish catalyst just in the last couple days that it has. If there was news on this thing that's pushing this thing up. If we had a volume profile, I would be measuring the range of this lower range in here, because you can see we have kind of this upper range, and then we have this lower range. So I would be measuring that volume profile. I don't think Dex Screener has that tool. Oh, yeah, we do have that tool. Okay. Yeah, and you're at the value area high of your range. So you can see you're at the value area high, you're at the daily level, so you're rejecting. If you come down to this point of control might hold. It would be a little bit nicer to come down to the value area low, which you can see the value area low is at your golden pocket. Let's see. Let me throw on. No, that's not it. I thought there was a way to mark out those. Well, you can see that value area low is right here, right around that golden pocket. And you probably need to set this, actually. Oh, we're not on log scale. Let's throw that on log scale. Yeah, you're at resistance for sure on this thing. I'd be looking for a little bit of a pullback. Now you could zoom in on this and look at local market structure. Actually, this thing looks kind of bullish here that it's forming this triangle. Just be careful with this, because these triangles that you it will see a fake out, break out, break back in it. But that's pretty bullish, actually. And you could also be looking at some order blocks, like, this order block here, and then you got a big imbalance candle afterwards. So that's going to be a nice into your golden pocket. But this 4-hour order block in here. All right, let's see here. Where am I at? So you're watching Tiki Taka, you're watching 97K, maybe forever, but I shorted 125 and still 50% left. Dude, that's awesome, man. That's a legendary trade. And I would be keeping that in case we do have a bear market. Oh, the news, Jaffiel. I mean, I just might be doing a collab stream with Jason soon. So, or I am doing one for sure. I'll let you guys know the day soon. Yeah, Jason, I love Jason. He's awesome. Okay, tells news. I truly Jason obsessed. Sad. I don't like to, and this is nothing. I just don't like to give too much personal information out about myself because the scammers are always trying to get after me. But I'm from the US. Let's just say that, like West Coast US, and age is a little bit higher than what you're saying, but yeah, I'm still relatively young. Session VWAP plus 0.5 scalp long at 90.3. Okay, let's check this out. Oh, I mean, 90.3. Well, my VWAP on Coinbase is actually a little bit lower. It's at 89.6, let's say. But you're looking for a scalp long opportunity from there. I would say be careful with that because we are kind of rejecting that value area high back test, the bearish back test. You do have some 1 minute bear divs coming into this VWAP. But if you're scalp longing this, like, okay, let's say we're doing like real low time frame analysis here, and you're looking for like an intraday scalp trade, you do have some bull divs on the chart on the 5 minute here. At least on the 1 minute you did for sure. 1 minute, multiple drives of bull div here. Money flow coming up on NAMI. Bull div, not really bull div because that's a higher low, but you're starting to find a little bottom here. So you might move up to test 91.5. So what I'd be looking at then in that case is, let's say you want a long right now. I would put my stop below that VWAP or below those most recent lows, and I would be targeting that VWAP up there. So that is still a 4-to-1 risk reward ratio. And it doesn't matter how small the move is, guys. You want to look at your risk to reward ratio and your stop loss percentage. So because our stop loss is only 0.21%, you could pretty much put 4 or 5x, your entire portfolio on 5x leverage or 4x leverage. And if you get stopped out, you're only going to lose 1%. So example of that, like let's say that we have $1,000 position, right? $1,000 portfolio, excuse me. Our portfolio has $1,000 in it, and 10%. So you're risking 1% per trade. So 1% of $1,000 is $10. Now, in this case, our stop loss is 0.216. You're going to divide the $10 divided by your stop loss, but because this is a percentage, you move the decimal over. So you're 0.00216. You could put on $4,600 position, $4,629 on this position. And if you get stopped out, you're only going to lose $10. Little example of that there. So it's about your risk to reward ratio. But a scalp long here, I mean, money flows coming up on the 1 minute. You got the big green dot on Market Cipher. You did have some bull divs on the 1 minute on NAMI. And we didn't quite tap the value area high yet. You can see that value area high wasn't quite tapped yet. So yeah, we might come up to SFP this local high and actually hit, and then the Bybit value area high is even at 91.7, where that pitchfork band is. So I guess it could be a good scalp trade there. I tend to only take those small scalps like that a couple times, but just if you're longing here, just use good risk management. Okay. Guys, I know you guys are talking about Blowfin, and I know Blowfin does have some good deals right now, but BYDFI also, when they reached out to me, I did a few months of working with them before I actually started partnering with them. They do have a really good order book. They do have really good trading fees and trading discounts as well on the fees. So this is another non-KYC exchange. Of course, I'm not telling you, you guys choose whatever exchange you want, whether you want, even if you join BYDFI without my affiliate link. Of course, I appreciate when you guys do join with my links, but and it will kind of get you access to the Telegram if you deposit more than $100. But just choose a good exchange. Blowfin's a good exchange. MEXC, I know there's a lot of kind of FUD that goes on about MEXC as well. I've personally never had a problem with MEXC, and I've been using them for years. But there's a lot of good exchanges out there. How long does it take to get a Palu citizenship? Well, it's not very long. I think, God, it was a few weeks for sure, because you have to like mail some stuff into them, and then you have to wait for your ID to come back. And then of course it does cost some money. But I would say no more than 90 days. Yeah. Yeah, 90 days. There you go. Travi Trades. Yep. Do you mind taking XCN? Okay. I'll look at render first. Yeah, we can look at some of these. Let me just read this chat here real quick. Guys, if you want me to look at any of the other altcoins, post them in the chat and we can look at like Ethereum, but we'll look at render right now and we can look at some of the altcoins. I haven't looked at render in a long time, but I am bullish on render, like as a project. There's got to be a better chart. Render. There we go. All right, so we're bouncing from the lower band of the pitchfork, and we're coming up to the top of our bearish pitchfork on render right now. Get rid of this. Let's get rid of this. Did we tap that? So you can see we've been chopping in a sideways and down momentum from this bear trend, this larger bear trend on the daily within this pitchfork structure. We came down to the bottom band of the pitchfork. Now, this weekly is a new weekly. It wasn't down here when we came down here. It was also probably your golden pocket. If you pull it from the crash lows to those dead cat bounce highs, we put that on log scale. Yeah, no, it wasn't your golden pocket. It's probably your equilibrium, your 50%. Yeah, your 50% Fibonacci. Around that. And then this looks impulsive though. This very similar to Sui, very similar to Say. This looks like a double 1-2 impulse. And I'll go into that in just a second, but look at where you rejected. Exactly from the top of your pitchfork, your bearish pitchfork. So in some ways, your overall bearish sentiment is still going, but you saw a move all the way to the top. Now, this is a good rejection area, but let's say that we're going to break out. You would expect to pull back here in a wave 4, wave 5, another wave 4, and another wave 5, and you'd want to probably come up to take out these highs here into your value area high. This is your prior range value area high. Let's mark that out. Or value area low. So what we're looking at here, and this is all, if Bitcoin starts to really mega dump again, guys, all of these impulses are going to be invalidated, and we'll have to look at them. We'll have to re-look at them as corrective moves, complex corrective moves. It's very rare though. Now let's zoom in here zoom into the 4-hour chart. So you can see on render, you have all this kind of choppy channel price action in here, and then you explode up out of it. Now we're retracing. The thing is, when you see all this choppy price action, you could look at 1-2. So like a wave 1, a wave 2, internal wave 1, internal wave 2. This all could be the start of your 3. So like 1, 2, 3, 4, 5. And actually, I'd probably look at this as a triple 1-2. 1-2, 1-2, 1-2. So 3 1-2s. You have a big push up in a wave 3. And now we're going to be looking for some 4 5s to come in here. So like a 4, 5, 4, 5, 4, 5. I'd be looking to come up to that $3.01 mark around there, because you'd be taking out this liquidity and maybe even coming up to take out the liquidity just above that. This liquidity. So between 301 and 309. taking out all that liquidity up there to finish this impulsive structure. But we're looking at now, you rejected the top of the pitchfork and you're coming down to your band right now. We did see a nice reaction from the band, by the way, flipping it to support. We can look at pulling our Fibonacci from the lows of wave 3 to the highs of wave 3. We'll turn on those wave 4 targets, and we're going to put that based off log scale because I believe that's more than a 100% move. Let's see here. Yeah, it's about a 100% move. So if you have more than a 100% move to the upside or more than a 30% move to the downside, you want, if you're using a log chart, you want to change that fib to based off log scale. I do like this 382 down below. Like if we do something like, you know, you have this initial push, you bounce, you create a lower high at the golden pocket, and then come down here, bounce from 197, and then you would expect an impulse to take out these highs. So 197, man, there's no real structure within this thing. This is pretty bullish here. And you have a naked daily at your 0.5. That's going to be pretty important. Volume level of support there. Oops. This is an unconfirmed naked weekly, but look at, that's where we're rejecting today. From our last week of price action, you're rejecting from fair value because the point of control is considered fair value. So in some ways it's bearish that you've lost the fair value. You came up to it. You're rejecting from fair value. You would expect to come to undervalued or to grab some liquidity down here. It's not a naked daily though, huh? Yeah, it was a naked daily as well. So you can see we're rejecting from a naked daily point of control that was naked until earlier today. Rejecting from a naked daily point of control. I would expect to move down to the 382 or that 0.5 is even really nice. But the tough thing about this is within this structure, within this move to the upside, there's not a lot in here. Even on the hourly, yes, you have some liquidity that's resting below these lows into your 382 and into your pitchfork band in here. You are bouncing from the upper part of the pitchfork band. Nice bounce, but just like Bitcoin, it had a bounce and then it came up and then it ended up bleeding down for a bit. So we might see that. Let's look at money flow is starting to roll over again. Money flow's curving back into the red again here on the 4-hour time frame on NAMI. And on the 1-hour time frame, money flows crossed into the red, still bleeding out kind of heavily into the red. You did have bull divs on the 1-hour into that pitchfork band, and that gave you this move up. But those 1-hour bull divs kind of already played out because you got the red dot and you did reject from that naked daily point of control. What I'd be looking for now is zooming out to like the 8-hour chart. Yeah, it doesn't look the worst here. Money flow looks pretty good. I would be looking for some 8-hour bull divs. So like if we do come down here again, you could see some lower lows, and then you'd want to see this make a higher low in here, some bull divs here. That money flow, you'd want it to start to come back up, starting to come back up here too. But it looks like Market Cipher B is trying to curl back up as well. Let's check the real low time frames, 15-minute here. Okay, 15-minute did have nice bull divs. I mean, bull divs, money flow was kind of coming up here as you were coming down to that pitchfork band. And even very locally here, bull divs. All right, we did break market structure on the 15-minute bullishly. We took out this high. So that's a bullish break in market structure on the 15-minute chart. Because you broke market structure bullishly, now we could at least pull our Fibonacci from the lows to the highs, and we can look between the golden pocket and the 786, and that we're at the golden pocket right now. So if you are going to make a higher low and continue pushing up, this area would be the area to bounce from. Personally, I'm not convinced yet. The naked daily point of control rejection was pretty harsh there. But if you're looking to scalp long this thing, and actually let's pull our trend here. Yeah, and you also rejected the top of your channel. You can see this is our kind of descending channel trend that we're trading in. You rejected the top of the channel, wicked past it, but look at that. Rejected the top of the channel into your naked daily point of control, and you're at the midline and your golden pocket now. So you might see a small bounce here. It could be as simple as bounce, reject, and then continue kind of to bleed back down here until you get down to this area. And you might just follow this trend, this intraday bearish trend or intra-week bearish trend until you get down to that 382. But I wouldn't be looking for longs after a 100% pump of the past week until we get down to about 197 or 181, 182. That could give you a nice long though. You know, if you come down to the bottom of the pitchfork band, you bounce from here, you could start to long as soon as you see some local bull divs or a break in market structure on like the 1 or 5 minute. You could look to long this thing. Stop would go below that low, and I would honestly be targeting as a TP1 the highs because we're looking at the larger bullish structure. That's a great risk to reward there, and even if you have to put your stop loss a little bit lower, you know, that's what I'd be looking at on render. And overall on render, I'd be looking to come up to take out. If you break this bearish pitchfork structure, you might break all the way up. Well, first of all, if you break the bearish pitchfork structure, it's highly likely that you're going to come test the value area low of this prior range. This was your prior range that broke down. It was a triangle, actually. And one thing I will say here, guys, is triangles. A lot of people think triangles are 50-50, but it's not actually. Triangles are a consolidation pattern, but it's a symmetrical triangle is a continuation consolidation pattern. So if you have your triangle here and you are, I guess, I do pull it like this. That wick, you'd have to exclude this wick in here. That's a little bit of a wick, but this is your triangle that you've been in. And if you dump coming into a triangle, this is consolidation, but it's a continuation pattern. You're more likely to dump out of it. And that's what happened. You had your big consolidation, but this was your prior range. This is your range here. So taking the volume profile of that range, when you lose a range like that, after you start to get some bullish momentum, you're going to back test that range, that especially the volume resistance of that range, which would be the value area low in this case. And if you reject there, you expect to see a decent move down. Now, if you can get back inside of it, well, you probably can work your way up to the value area high of the range with some rejection at the POC. But what we're looking for now on our bearish pitchfork, if we break out of this, if we hold this and break out of it, you would expect an immediate low time frame back test. That could be one of your fours, your secondary four, and then some 4-5s to come up to back test that area. This could be a swing short up here to bring down, even if it's just going to be, you know, to come down even to that golden pocket that was front run, pulled from this low to this high. And you could continue this bearish structure overall. You faked out, rejected, fell back inside of it, and you would probably work your way down through it. Okay, XCN. Okay, very nice. This had a bearish pitchfork that we're breaking out of. Maybe this is what we could see on render, but you can see it was rejecting the top of the pitchfork multiple times, and you were chopping and holding the pitchfork band as support, but then You lost it, bearishly backtested it, you reject there, so you come down to your midline, bounce from the midline, make a lower high, and then you're kind of rejecting this midline and chopping around it underneath it. But now we're impulsing up, breaking out of the bearish structure. So imagine this was a channel. Either way, when you break out of a channel or a bearish pitchfork, you break out, you're going to run into some resistance. You look for that back test of that trend breakout. And on that back test, if it holds, you expect to make new local highs above these highs. So we're in the process of back testing the breakout of this pitchfork right now on the daily time frame. Did we grab those highs? We didn't even grab the liquidity here. We did grab this liquidity. You can see it's a liquidity grab of this high. But I would be looking to take this liquidity as well right above us into your value area high. And actually, let's pull this. Shoot, you could really look at all of this. Yeah, and you're rejecting your value area low. So we came up, rejected value area low, took this liquidity, and now you want to hold your pitchfork. This doesn't look good to me, though. This looks like it could be a dump, three-wave move up, and then you could be about to dump again here. Because this kind of looks bear flaggish. But it is holding. Let's see. We'll go to the 1 hour here. Ah, man, you had some pretty bad bear divs as you were coming up to grab that liquidity. Bear divs here. Money flow is just about to cross into the red. And bear divs here as well. Bear divs on money flow. What I don't like about this, I mean, it is nice that you grabbed liquidity at the bottom. You can see this was your low. You came down and you grabbed the liquidity from the low. And then liquidity grab from the low, and then you pump up. And in some ways, you are forming a triangle in here. And remember, a triangle is a continuation consolidation pattern. So you pump coming into it, you have a higher likelihood of, I'd do this, something like this. Pump coming out of it, almost like a bull flag, right? Or a bull pennant. That weekly at the POC is going to be nice at 01844. Man, the way this thing moves. All right, let me hide this range for a second. And I want to look at a potential for an impulse down, looking at this as a larger wave 1, wave 2, wave 3, 4, and then another low and a 5. So we want to see if that's going to happen. Let's pull our Fibonacci from the highs of wave 3 to the lows of wave 3. We're going to put on our golden pocket, and we're going to make it based off log scale. Okay, we didn't hit that golden pocket, just barely. We missed out on it just barely. If you hit that golden pocket, it invalidates a fourth wave. We couldn't consider this a fourth wave. And actually, the way this pumps straight up, it's already unlikely to be a fourth wave. It's likely to be more impulsive. Nice big spike in volume. Watch that golden pocket just above us, because now what we could see also is kind of holding this overall to just come up and SFP our local highs that we just had into your golden pocket, and also to SFP the highs that were just above that didn't get hit. these highs, the last rejection from the back of the pitchfork. There we go. You can see that's in your golden pocket, 13.5, let's say, 0135. So I'd be really careful for that. It would create some more bull divs. Now, money flow looks very bullish here on Market Cipher B. NAMI is quicker, and NAMI's money flow is just crossed into the red. This is where the two can kind of combat sometimes. Let's look at the 8-hour. Yeah, it's a bit mixed here. You don't have bear divs on high time frames, though, so I would look for some local continuation up if this holds. Okay, let me check. Jesus Save 77, welcome in. Much love to you and God bless you. Thank you for being here. Yeah, guys, please hit the like button for me. If you get any sort of insight from this stream today into any of coins or the market in general, please hit the like button. Let's see here. And yes, Sad, thank you for understanding that. Sad 2725. Samuel S., welcome in, by the way. It's great to see you in here. And thank you for modding. Thank you for being here. I'm going to be the only Palu ice hockey player. Heck yeah, man. Let's form an ice hockey team. The Palu National Ice Hockey Team. A bunch of crypto traders. Let's see. Oh, Discord launch. Not yet, Jopfiel. I am planning to do that sometime. There's a few things I'm looking at. I've got stuff in the works. Let's just say that, but it's probably not going to be for, honestly, like being honest with you guys, a couple months or so. What's good in Palu? No taxes or only the women there? Well, the women there for sure. Like, yeah, accepted Web3 ID on most centralized exchanges. Yeah. Okay. On BCH short term. Okay, wait, BCH. Oh, wow. All right, I'm just going to. We have our larger range here. Geez, I need to clean this up. There's a lot in here that is probably trash. We did bounce from our support level, though, guys. We had this little box marked out last time we looked at it. This is actually, you have a lot of overlap between your highs and your lows here. So you got to either look at this as going to be like multiple 1-2s, 1-2, 1-2, 1-2, because your highs are overlap, your lows and highs are overlapping here. And that is not what you want to see. If it's if it's a 1, 2, 3, 4, 5, you don't want overlap between your highs of 1 and your lows of 4. If that happens, then you have to look at it as 1-2s, like 1, 2, 1. If this overlaps here, you have to look at it as 1-2s, and then you would get your big 3. But the fact that you're breaking out of this volume profile and you flipped it to support, so let me hide this here. You can see this is our big weekly range. Broke above, even here, broke above the value area high, flipped it to support, and now you're continuing up. You just took out your range, your last weekly highs there. And did we hit those weekly lows? Let's see. And I know you asked for low time frame. I'm going to get there in just a second. This is a weekly that we haven't touched yet. Yeah, and I would be looking honestly at this as a sideways range in here. You're breaking out of the value area high of that range. So if you come down to what is this? 607, let's say 6068. I'd be looking for that as support. But this honestly looks like a lot of bot trading in here. And this is like a contracting diagonal or an ending diagonal, so be careful because all these ending diagonals, when they do end, they tend to break down pretty hard. No bear div on the daily. Well, Nami is showing slight bear divs on the daily. Man, this honestly, this is a nightmare to try to count as Elliott waves from this low here. First of all, you didn't take out the liquidity. You front ran the liquidity. So, I mean, you could look at maybe this was a larger 3-wave corrective move to make a higher low, but you have another one, internal two, internal ones and twos all through here. I to be honest with you, man, I don't know the count on this. Like this is just crazy. This kind of overlap that we're seeing here is a bit wild. You are in bullish market structure though. So, go with the trend, higher highs and higher lows. You keep making higher highs and higher lows. Just be careful because this is compressing tighter and tighter and tighter, especially up here. It's kind of compressing tighter and tighter and tighter. And it looks like you are in some sort of wedge structure to end this, like an ending diagonal here. You just took out the liquidity of the highs as well. Yeah, what I would want to see is this 607, 606 to 607 holding its support now because you haven't had a clean, I guess. So you see here, break above it, but next day you close down below it. Break above it, spend one day above, close down below it. So now we're breaking above it and we're holding for multiple days. If you come down to 607, you want to hold that and then you want to continue this push up. And you are above your macro value area high. That's about what is that, 545-ish, let's say, 546. Another thing, you've also flipped your, let me just hide these real quick. You flipped your midline again to support. Well, wait, this is off. Yeah, okay, look at that. So you flipped your midline, your pitchfork midline to support here, and now you're pushing up. So you just took out your local highs. This is because this is a bit of a range above that. You could see a move back down to back test the golden pocket before continuing up. What I would be looking for, and then you also have these highs in here that haven't been taken. Three, four, five. 3-wave corrective move. Yeah, this might be part of a big complex corrective move. 3-wave corrective move. You might be getting a 3-wave corrective move to take out those highs, and then another corrective move in here. But you'd want to come down and take out, or at least come close to taking out those lows, creating this big ass sideways range in here. But that's definitely the price action you want to be analyzing with this thing, is that big ass sideways move. You flipped your pitchfork midline to support. So now I would be looking overall, if you have to watch for this liquidity grab at 719. And then I would be looking at the golden pocket, honestly. And you have some very nice liquidity resting into that golden pocket. Makes sense because this is where it starts getting really wedgy. Right here. So if this wedge breaks down, you're going to break down. You're going to take all that liquidity of the wedge into this golden pocket and grab this liquidity here. And then you might see that move up. Okay. No, and G's Save 77, we haven't looked at XRP, but we can look at XRP here. So XRP was in this descending channel. Now, this descending channel is based off of this price action. I have it extended to the left and to the right. That's why it's kind of showing this as well. But it's taken from this high to this lower high to this initial low in here. Now, looking at that, we've broken out of the channel and we're back testing that channel right now. But this looks like a wave one, a wave two, holding the value area low of your range. Wave three pushed up to the value area high. We're rejecting value area high. We want to hold that 0.382 to 0.5 Fibonacci. So we're going to go from the lows of 3 to the highs of 3. Wave 4 targets. And let me check this. Okay, that's only 33%. I don't. Have we hit the golden pocket yet? Not yet. If we hit 204, you're in trouble. You don't want to hit 204. Honestly, it would have been better to have bounced from this channel to continue up to grab that liquidity around 258. That's the second pivot of that channel. All right, so we have a couple ranges we could look at, though. There's this whole range after the crash, after the October 10th crash, all this sideways price action. But you can see this is kind of one range in here, a sideways range, and this is a sideways range in here. So let's pull a volume profile. Of this guy here. Yeah, and you're falling back inside the volume profile and bearishly backtesting the value area high in the channel. So you fell back inside the channel, you fell back inside the value area high, and we're bearishly backtesting it. If we reject here, you're not only probably going to hit this golden pocket, invalidating this as a 1, 2, 3, 4, 5. But even if you bounce from here, I would expect a major drop on this thing because you would have to classify this as a 3-wave corrective move. And then this thing could come all the way back down. Two-hour money flow doesn't look very good. Let's go to the 4-hour. Okay, not the worst. Slight bull divs here. Money flow coming to the upside. We want to close today's daily candle above 214.85. We need to get above right now and flip that. Let's see. Naked dailies. We do have that fresh naked daily at 219. Be careful because that could be a rejection point. Yeah, that's from yesterday. Naked daily at 219. We have some naked daily. We have a lot of stuff above us here. Okay, so naked dailies. We got. I really thought we were going to come up to like this 277 to 287 area. This golden pocket here. It's pulled from your all-time high down to your crash lows or to the new lows that swing filled the crash lows. this would be a very nice area to look for a potential swing short from. Even if it's going to be just to pull down to your golden pocket, pulled from this low to this high, that's still a nice swing short. We can look at our bigger volume profile. So this entire sideways range in here. Yeah, you're rejecting the POC of that range. That's not good. So you want, man, the value area low is coming in of that macro range at 198. We really do want to hold that if we come down there. And that's going to be your larger golden pocket as well. You can see that's your golden pocket value area low. The problem with that, though, is if this is a 3-wave corrective move, if you come down to this golden pocket, you could bounce. You're probably going to create a lower high before coming down and taking all that liquidity again. Because this, another thing, this low from the Coinbase chart only, you made almost a double bottom. Look at 177.10, 177.05. So essentially it's a double bottom down to like the thousandth of a penny or whatever. And that's not a good swing failure pattern. That's more of a double bottom there. This value area high, 277, man, this area is so nice. If we can hold this, break above, grab liquidity, flip that. So we're looking at a couple different scenarios, and honestly, we kind of are just in holding mode until we see if we hit that golden pocket of wave 3. So not this guy here, but this golden pocket. If you hit 204.12, it's going to invalidate that impulsive move. We want to start to push up here. Okay, wait. You just put a short on Bitcoin. No, just now, or like I'm looking for a potential short at like 91.5 to 91.7. But earlier in the stream, I said we might bounce from the VWAP to come up to actually hit that value area high. Because remember, we're looking at the we're in process of a higher time frame bearish backtest. We lost it yesterday, bearishly backtested. Since we rejected here, we came lower, made new lows. But now, after holding your golden pocket and your anchored VWAP in here, we're pushing up to see if we can backtest it again. We front ran it earlier today. Bounce from VWAP. Because we bounced from VWAP, we expect to take out that local high from just a couple hours ago. This high here at 91.395-ish, 91.4. So I want to come up a little bit higher, but I'm looking for a short potentially at around 91.5 to 91.7. Okay, yeah, we're not short long here. Yeah, we're in the middle of a range. Yep, that's true. And I don't know if you're looking at scalp or like a bigger day trade short. I definitely want to be bigger day trade shorting right now, unless you reject from this. Like the whole premise of this trade idea, guys. Remember, trade. You should always plan out your trades. So we have our 8-week long range, 7-8 week long range. We attempted to break out. We rejected that from a liquidity grab of the highs of the range. You're falling back inside of it now. So you're bouncing from VWAP. But if you come up here and reject, you're pretty much confirming reacceptance back within this range. So you would expect to move down to fair value of the range, which is the POC, which also has a lot of confluence of support. So if you're shorting 91.7, 91.5 to 91.7 to come down to 87.500, that is a decent short in my opinion. But right now you're kind of in no man's land here. I wouldn't be shorting just quite yet because there's not really resistance where we're at. I bet you that, let's pull this Fibonacci to here, and then let's go to Oh, are we rejecting the 382? Yeah, we're coming up to the 382. 382 will reject you in a strong trend. And locally, at least, for the past 2 days, this has been a pretty strong bearish trend. The big thing was closing yesterday's daily candle back inside the volume profile. It's not a good look. On Sol, your TP2 probably hit. Mine barely got front run. By now, would you just hold or would you close the amount you would have done now? Okay, so a good question on that. Because we broke market structure bullishly, I would probably pull out a little bit more profit if we come down to the VWAP and bounce. So yes, TP1 we had at 135.5, and then our TP2 was at this 0.5 Fibonacci and the POC. We got a nice strong reaction from that area. And overall, our premise is higher highs, right? 1, 2, 3, 4, 5, right? To come up higher and to take the liquidity of the range. So if you shorted this right here with me, if you didn't take a TP2 because it got front run, I would probably, let's do this here. Let's do this. Let's pull our golden pocket from the high to the low. It's tough, job field, because we could be looking at a 5-wave move, like this being a wave 1, a wave 2 retrace to your 786. This is your wave 3. This is your wave 4. This is your wave 5. Now we're going to see a corrective move up to the golden pocket in a B wave, and then we're going to see another 1, 2, 3, 4, 5. And then this holds overall, giving more time. Because remember, we want our time to be around the same amount of time as this or longer. This was 3 days, 10 hours. And what do we have here? Yeah, 1 day, 22 hours. So definitely if you start breaking this golden pocket, I would be pulling some profit out there. But there's a real chance you could reject from this golden pocket to continue down again, just as far as time goes for this corrective move, and seeing a larger 3-wave corrective move in your wave 4 before bouncing and impulsing up in a wave 5. Probably going to be something like 1, 2, 3, 4, 5. Come take out these highs. Okay, like I was going to do another 50%. Would you do it now or wait for around a long entry at 134 to 138? 134 to 134.8. Now that you broke market structure bullishly, Jaffiel, the thing you want to watch for is a bounce from the VWAP and or a bounce from the golden pocket, right? Because this was a bullish break in market structure. Even though you see we broke it, now we're kind of back testing that high. If you come down to VWAP at 136.13 or 136.15, let's say by the time, and start to hold it, I would probably pull some out at the VWAP, even if you just come up here and reject this to come down again, because you could always just re-add some in here. I mean, that lowers your entry uncomfortably. We did bounce from that naked daily point of control too. That's the thing. Nice bounce. It was our naked daily point of control, and it was our 0.5 Fibonacci, our range point of control. You do have a fresh daily that's going to be right around your 786. Damn. Okay. I actually like that better than the golden pocket. See, what would be nicer to see, because this would allow for some time too, is if we do bounce from the VWAP, maybe expect that move up to the 786, reject there, come back down, grab that naked daily that's below us, or I think it was hit already. No, we have one at 131.86. Yeah. I might compound my short again if we reject from 141, 141.1, and look to take it down. As soon as we break these lows, though, I'm taking some out. A lot of it out, at least 50% of it out. Bitcoin is bouncing from the VWAP, so likely it's probably going to take out those highs from 2 hours ago, 2 or 3 hours ago. Okay, now that Sol made a new one, yeah, and invalidated the continuation. I feel like this should be an indication just to close the short. Jaw feel, it depends on where you're short from. Like, remember, I'm short from rate, like pretty much exactly this. This is not Solana. I'm short from exactly this 786 at 141.8. So if we're gonna come all the way up to 141.1, I mean that's pretty much like opening a new short, right? So I would be, yeah, you could close some out. The thing is, this might grind for a little bit until you actually hit the VWAP. But I would potentially look for another short from that 786, and it's a daily level. Okay, you're in a short G save 77. Yeah, on XRP, I mean, man, the thing is, fall back inside the volume profile, fall back inside the channel. I mean, we're flirting with this, right? So depending on what happens here, you're either going to dump down. If you hit this, you are probably going to see some sort of reaction and some sort of bounce from this. But that's when we could look for a much bigger dump to the downside. If you break above it, then I think you are, because your bullish structure hasn't been invalidated. 1, 2, 3, 4. I would be looking to come up at least to take out these highs. Now it depends on where you're short from. If you short it up here, damn, I would be holding on to that. I would have taken some profit though already. Okay, rejecting local golden pocket. Now, I think that's on Bitcoin, Decrypto, rejecting the local golden pocket. Or you might be talking about something else. Yeah, Jawfield, that's a bit of a tough one. Your entry 786 almost at my entry. Yeah, I would probably take some at the VWAP. Like if it was me, because we broke market structure bullishly locally, and let's look at the low time frames here. Okay, you did print a hidden bear div on the 5-minute. And you have slight 15-minute bull divs. That's the thing. Bull divs on Nami as well. So those bull divs at least probably bring you up to the golden pocket. Oh, I see what you're saying, Decrypto. We're rejecting this golden pocket right now. Yeah, if you break that golden pocket, you're probably going to come up to your larger golden pocket, which is 139.2 to 139.6. And honestly, it's probably pretty likely that we are. The question is, do you do this first? Because look at little mini impulse, 3-wave corrective move, and then do you come up to the 786, seeing a bigger 3-wave corrective move before continuing down? Can't we be forming a double 1-2 setup on BCH? Like what time frame are you looking at? Because you could absolutely be with all those overlapping structures in here. This could be 1-2s in here. The thing is, you're rising in a wedge, like it's like a wedge-like structure. So it's, to me, it's risky because this, with the overlap that you see, push up, higher low, push up. But look at this low right here, you overlap these highs. So that would, you would have to classify this as a 1-2, 1-2. You push up again, but once again, your highs, you overlap the highs from these highs. So now it'd have to be a triple 1-2. You push up again, you take the liquidity, you overlap the highs. Now it has to be a quadruple 1-2 or a multiple 1-2. Push up again, now you're overlapping the highs again. And it's just getting tighter and tighter and tighter into a wedge. And generally when that happens, yeah, just be careful with that, man. It is either going to be a bunch of 1-2s, but you would expect this to really break out. If it's going to be a 3, you'd expect a real big breakout, or the wedge is going to dump you hard, right? And I know that's both scenarios, so you're like, of course one of those is going to happen. Tell you what, I wouldn't be longing right now. This was the long right here where we had this, and this golden pocket wasn't here, by the way. This was support we were looking at before. It just wouldn't be surprising to me to see, now that we kind of grabbed the liquidity from the highs, from these kind of equal highs, if this wedge did break down a bit and you came to that golden pocket that was right here. And then that might be just a continuation of this sideways range. Because your value area low is going to be at that golden pocket. That could be a decent long, though, even if the wedge breaks down. Golden pocket value area low. Liquidity from the wedge. Let me make sure I got this right on there. So 522, looking pretty good for support right now. If this might even continue up to take this first, though. So we'll have to see. It would, of course, change that golden pocket. But if you do come down to 522-ish, value area low, golden pocket, liquidity grab, I would probably only long it on the successful liquidity grab. You grab this liquidity right below, and then you reclaim 522. That could be a good long. Actually, you know what I'm going to do? Set an alert on that. Would you be so divine and look at Aptos? Yeah, we can look at Aptos for sure. And guys, I do got to leave soon. So I'll look at Aptos, then we can go to Bitcoin once more. And then I'll get out of here. Let me check my Coinbase chart. Well, Aptos is in this small rising channel on the daily time frame. You're coming down to the bottom of the channel right now. That daily just above us, you can see I have an alert on that daily already at 202. Man, I kind of wanted to short if that daily or that liquidity rejected us. But once again, this on Aptos, you would have to be, if this is going to be impulsive price action, because your highs and lows overlap, your highs and lows now are overlapping here. If this is going to be a bullish structure, you'd have to look at this as a wave one, wave two, wave one, wave two, wave one, wave two. And then you're either going to break out in a big third wave, or this is about to break the channel and you're probably going to flush down really hard here. You did have some pretty aggressive bear div, and money flow is just crossing into the red. No, very slight bear divs on the 4 hour. See, the thing with Aptos, man, if this is a bunch of 1-2s in here, you could make it all the way back up to backtest like 414, like 416, this value area low. All these prior lows in here. Money flows starting to curve out on the daily time frame and crossing into the red on the daily time frame. That might be a sign that this was a corrective channel before continuing the breakdown, guys. Don't like that at all. I want to just check that. Not this one. Where did that? The concerning thing for this is this could be a larger, a 1, a 2, all of this is a 3. And then that's why I have the 382 to the 0.5 on this, is because if you do retrace in a 4 coming up to that 351 or that whatever that is, 465 area, 4, and then you could see a 5 to finish this big kind of bear market impulse to the downside. We can actually look at that trend with this pitchfork. And let's look at an original. Yeah, so you do have a fresh naked monthly at 226. That's going to be at the top of your pitchfork. So what I will say here is you're at support not only of your channel, but you're back testing the pitchfork band. So you can see this bearish pitchfork got above it, flipped it to support, got above it. If this holds right now, flip to support. I mean, it's likely that we are going to continue up. We have that daily that's just above us at 202. And let's throw this trend on here. So this is definitely support. You have a big green dot on the 4-hour chart. I think you could make it up to 226. Nice bull divs, multiple drives of bull div, and your money flows curving to the upside here. And then honestly, I'd be playing this range. Oh, you're below the value area low. That's not good. Here's what we need to look at. If you do reject 184.75, we're probably going to break this bigger channel down. If you can get back above that, then you're probably going to keep going. Right? This is our trend locally. You're bouncing from support of the pitchfork band and the bottom of the channel. If you reject here, you're probably going to lose this and probably drop all the way down to take out the second pivot liquidity into your lower pitchfork band. Yeah. I mean, that is what I would be looking for. Because your golden pocket's right there. So a liquidity grab into this golden pocket. So watch this test coming up right now in the next few hours at 184.7-ish, let's say. If you reject this, you're probably going to lose this. And this will take some time to play out, but you'll probably come down, hit this golden pocket, grab this liquidity of the second pivot of the channel, and hopefully see a move up. At least there. We'll check out tomorrow. Aptos, Hot Tamale, if you're here tomorrow, remind me and we'll check this out. Local market structure on this thing has been broken bullishly on the 15-minute. So you can see lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. But then you came up and you broke this high right here. So that's a bullish break in market structure, right? Okay, you broke market structure bullishly, then you made a higher low, and now we're pushing up here. So at least locally, it's highly likely we break this high from a few hours ago and come up to 184.6, 184.7. This is really going to be important what happens here. Crypto Moon 1, you tried to enter Telegram, but it seems not to work. I'm not sure why it's not working for you. Did you, in order to enter the Telegram, you have to sign up with BYDFI using my affiliate link in the description. And then once you've done that, you have to deposit $100 into the exchange. Once you've done that, the bot will automatically detect your user ID that you've deposited $100 and it will let you get in. If you haven't signed up with my affiliate link and you haven't deposited the $100, it won't let you do that. So that could be what's wrong there. I don't know if you've done that or not. You're going to quit. What type of trader are you? I thought you were going to stick with us to the very end. Yeah, no, I'm not quitting. I'm just, I got things to do. I just gotta go pick up my kiddo. I was talking about the longer time frame for us to be forming 1-2 setup since September 18th. Okay, let me check BCH there. Since September 18th. Wait, that's up here? Okay. No, you would, if anything, this is going to be a flat correction because this was a high on September 18th. Okay. And then you've now retraced to take out that high. So if it's a flat scenario, push down, come up in your B wave, take out the highs, and then push down, you would expect to take out these lows at the very minimum. being a larger flat corrective move in here. After taking out those lows, you might be able to continue the bullish trend because you pushed into it bullishly. So you have your impulse, flat correction, impulse. And I would say just if you're looking at this as a wave one, a wave two, no, your wave two will never take out the highs of wave one. So if anything, it's going to be a flat correction. And that actually would make sense if this is a wedge that's about to break down. You're probably going to do your push down here is an impulse. So wave 1, 2, 3, 4, and then 5 coming down, taking out that low. And then from the taking out these lows, you could push up. Diamond Whale, what's up, man? Welcome in. I'm literally just about done here. But we're looking at, we're just checking out Bitcoin. We're checking out some of the altcoins here. Bitcoin is pushing up. Remember, guys, I said because we bounced from the VWAP, we're likely to at least take out our high from a couple hours ago. And whoever asked me about that scalp trade, that was a 4-to-1 scalp trade. We maybe should have entered that because we were right in here. I believe it was like right here. And I said stop would go below the low, below the VWAP, and you would be targeting just the value area high. That's still a 5-to-1 risk reward scalp that we could have done. Now, obviously, it's way too late. We should do more scalp trading during the streams. What do you guys think about that? Like doing some the thing is you don't always get a good setup like this. Like we broke market structure bullishly by taking out this high. Okay, so now because we took out that high, you're looking for a higher low or even a higher low here. And then I want to come up to backtest that VWAP or that value area low. But between 91.5 and 91.7, and Bybit's 91.7 looks pretty good here because that's the top of the band as well. Do you think we reject or SFP the value area high? I think it's possible. And the reason why, Slick Shoes, is because we closed the daily candle below underneath. But let's see if we're coming up here. So I'll tell you guys what I'm going to be looking for. As we're coming up here to this area, I will be looking, in order to confirm a short at this area, I will be looking for bear divs between these two highs. So right now, it's possible, right? Bear divs. NAMI is actually not showing bear divs right now. So you want to be looking on like the 15-minute and under. 15-minute, 12-minute, 5-minute. And NAMI is not, but Market Cipher B is. Now, also money flow is kind of going against us. It's just crossing into the green here. Right now, actually, it doesn't look like we're going to reject it. Money flow's curving up here. We had very slight bull divs on the 1 hour. Bull divs on the 1 hour. Money flow's coming up here. We might not reject it. The thing is, if we can get back above it and flip it, then I would actually expect us to take out the highs. And that doesn't mean right away, because you could do this, come up to Golden Pocket 786, reject, and then make a higher low, and then start to push up here in that 1, 2, 3, 4, 5. So it doesn't mean we're going to go straight up. It doesn't mean this is going to happen. Yeah, Jaffiel, I feel you on that. We should do that, and that would be fun on the stream, and I could show you guys risk management. I could show you guys a bunch of stuff like that. Yeah, the quant, and Sudeep, welcome in. It's good to see you. I'm honestly just about to quit here, but the daily time frame, I am still leaning more bearish too, and I don't know if I would say it's a bear flag. I see what you're saying with this. pull, flag, dump, right? And that still could happen, by the way. And we could still come up to 102, 101, 102 with that bear flag, right? That's where your 50-week moving average is. Actually, I don't know if you'd want to come up quite that high. You could still make new local highs and still have a bear flag play out. By the way, we do have a nice little channel within this. Here, let me just go on to this chart. Let's go to the 2-hour chart. And I do want to show you guys this. I have this parallel channel. I'll just throw it on the Bitcoin chart or the Coinbase chart. Let me get rid of all this stuff. I already have it on here, so. There's your parallel channel. Let me hide the big Fibonacci channel. But you can see this is your, and look at where the support at 87,500 is coming in. If we do reject here, then we're probably going to come down, hit that box of support. You could still just keep trending within this thing. But this is kind of your trend, right? So I took it from the 80.5K lows to the higher low, and then you bring it up to the first initial high. That's your channel that you're trading in. And yeah, it does look kind of like a bear flag. Yeah, you got to say, pull. But here's another thing. The reason why I'm not considering this a bear flag, take your Fibonacci time. Where's that? Trend-based fib time. And you're going to go from the highs of your pull, if I can get it, to the lows of your pull. Why won't that work? And we're almost 2-to-1. So your flag is almost 2 times as long as your pull. Generally, you want to see some pretty good symmetry there. I know that it's not perfect in the markets, but generally you want to see some, like, once you start crossing the 1618 fib time, that's getting a little bit long for the flag to play out. That's as far as pattern trading goes. Now, if you wanted to pull the pull all the way up to the all-time high, then you're just crossing the 1-to-1. I mean, that actually makes sense that you're crossing the 1-to-1, and now we're about to start a big dump here, right? So this is all your flag or your pull. Here's your flag, cross the 1-to-1, and then you would expect a dump. But that would be a giant, I wouldn't be expecting the whole pull to play out. As far as like the target for the pull. Let me just zoom out to the daily and make this easier. Because that would drop you this. Well, actually, low 60s is not that bad. But I would be expecting a major bounce from 70K first. And it is interesting if you look from the all-time high all the way down. As soon as we crossed and hit the 1-to-1, we started dumping here. Very interesting. You gave me something to think about, something else to keep track of. Guys, it doesn't look like we're going to get the short from the value area high back test. The oscillators look decently bullish right now. I mean, okay, guys, I do really got to get going here. So do that on bar replay. show is the setup for that scalp. Okay, wait, do that on bar replay and show the setup for that scalp. No. Oh, yes. Are you talking about Travy Trades? Well, we were looking at it live, but here's the thing. Okay, let me show you this. Wait, we got to zoom in. Let's pull our golden pocket from the lows to the highs. Golden pocket and your anchored VWAPs here. Right? So we know it's support. Now, how do I get this through? I don't use replay mode very much. How do I make? Okay, wait. Let's do 5x. So we were coming down. You hit your support level. You swing failure patterned after that. So I would have longed right there. But during the stream, remember, during the stream, we were zooming in at the very beginning of the stream. We were right in here. And I said, guys, we are bouncing from support. We are starting to break market structure. We could look for a long. I think we were right in this general area. I said, you just put your stop below the low. And I would be targeting the value area high, which was at 91.5-ish. Actually, I think we were down quite a bit more. Because I remember it was a 5-1. You can go back on the stream and watch that. But it does look like we want to, as soon as we bounce from the VWAP, we expected to make new highs here. Oh, that's what it was. We were looking at the bounce from the VWAP. Sorry, guys, not this support level. We were looking at the bounce from the VWAP coming up. But I do got to get going, guys. It's been 3 hours and like this is like kind of my hard cutoff time for me right here. Gotta go pick up someone. So thank you all for being here. I will be live tomorrow at 2 p.m. Eastern Standard Time. Please come join me tomorrow. Please hit the like button on your way out. Genuinely appreciate all of you guys that are here on a regular basis.